wow, this is crazy, okay? I appreciate y'all being here as always, okay? Michael Burry, the trader who rose to fame with his winning bets during the subprime crisis, which were obviously featured in the book and the movie The Big Short, loaded up during the second quarter on put options, which put options, just simply put, is basically a bet that certain stocks or an index are going to go down by a certain date, okay? That would pay off if the S&P 500 and NASDAQ sank, a regulatory filing shows on Monday. The filing drew attention on social media, though such data is dated, because do remember this in terms of this filing, it was as of June 30th. Obviously, as of today, it's August, 14th today, right? So he could have completely moved out of this position. Highly unlikely, but it's a possibility. So do keep that in mind, okay? The 13F filing shows that Scion held 2 million put option contracts. We're not talking about $2 million worth of put option contracts. We're talking about 2 million put option contracts on the Spider S&P 500 ETF Trust SPY, which tracks S&P 500 as of June 30th. It also had held 2 million puts on the popular Invesco QQQ, which obviously the QQQs have been flying high this year, right? This is a shockingly startling move, okay? Put options give the holder the right, but not the obligation, to sell the underlying asset by a set time for a set price, known as the strike price, and are thus popular instruments for betting on downturns, right? So he could keep these all the way till expiration, which we'll speak about expiration in just a moment. But the thing you got to understand, I think this is very important that everybody watching this understands this, okay, is Burry can, if he chooses to do so, sell these option contracts off to somebody else in the future. So let's just say hypothetically, these option contracts expire, let's say a year from now. But let's say the stock market tanks for whatever reason over the next 6 months. 6 months down the road, if he wants, 7 months, 8 months, whatever, he can sell these off to somebody else. So he doesn't have to exercise these all the way up until the date. And I think that's just something that's important that everybody understands about kind of options and how these things work, okay? But they can also be used as a hedge positions or part of a broader strategy. The SPY puts made up more than 51% of Scion's reported holdings, according to whalewisdom.com, while the QQQ puts accounted for more than 42% as of June 30th. This is like a, put the chips on the table and shove them in type move by Michael Burry here, okay? That's why I say this is a no-jokers, holy smokers move, okay? But investors are required to disclose only long positions held at the end of the quarter. So filings may not offer a complete picture, right? I went to that Whale Wisdom website, I think it was called Whale Wisdom, Whale Wisdom, and I went ahead and looked this up, and I'm like, it's a startling move in regards to Burry here. This is like, he's betting like the future of Scion really on these puts. Like this is intense, man. I think this is as epic of a move, right, as the move he made prior to the great financial crisis, in terms of just like betting your reputation, betting your fun, betting your mental sanity on these put options. Like this is intense and insane. I'm like, this is crazy, okay? No other details were immediately known, such as the strike price. I'll tell you what I think the strike price was in just a moment and those sorts of things, okay? The date it expires, a premium paid, or current holding status with regards to these put option contracts. However, the total contract value of $1.6 billion represents about 93% of Michael Burry's reported portfolio. Put option holders usually gain when the price of an underlying security falls, right? So as simply put as possible, he's basically betting that the S&P 500 is going to fall significantly, likely, and the Qs are going to drop significantly, the NASDAQ 100, right? Which, if you're going to make a bet like this, you've got to be very convinced that these indexes are going to fall at least probably like 20% plus. Like, you're not going to make a bet like this if you think there's a 5 to 10% pullback. It's not worth it. You've got to be convinced that there's a massive move down coming for these, right? The Spider S&P 500 ETF Trust was trading at $443 a share on June 30th, 2023, whereas AQs were trading at about $369, and basically they're around flattish since this reporting date. Now, we also don't know. He could have been loading up on these short positions in April, May, it could have been June, right? So we don't know exactly when he put these on. Now, my personal opinion in regards to what I think he did strike price wise here, or not strike price wise, but in terms of how far out expiration wise, okay? And I have no inside knowledge of this, but in my personal opinion, he likely bought these to expire at the beginning of 2024 or maybe the middle of 2024, based upon the fact that he put these on in the second quarter of this year, obviously. He wants to buy himself some time. So I'm thinking the beginning of 2024, maybe middle of 2024 in terms of expiration for these, in my personal opinion. Now, he could have done shorter. Maybe he did them to expire at some point this fall in 2023. I don't know if he would make that big of a bet in that short of a time frame, because you need things to play out here a while, right? And to put yourself under the gun like that, especially when you're this heavy into the position, is very, very risky, okay? Because sometimes it takes the market a little while to deteriorate, and it takes longer than you think, right? A friend sent me this little kind of meme here, okay? They don't know how short I am, right? Michael Burry has now put 93% of his entire portfolio into the SPY and QQQ puts, and people are talking about melt up. Shall we resume the melt up? And that's the risk, man. Because if this goes bad, it's going to be devastating to obviously Scion Capital Management. Like, my gosh, right? I thought this was very interesting. This was on Twitter from this gentleman named Brad Freeman. Okay, I guess it's called X now. Okay, we're still calling it Twitter. I don't care. Okay, so it was very interesting, kind of reading through his perspective here. Okay, why Chris is a good hire. Chris's background is in running small businesses and self-employed segment at Intuit. He spent 19 years in roles like Chief Product Officer, and he also worked for Microsoft in the past. While he wasn't the CEO of Intuit, he did lead a segment representing a third of the $140 billion enterprise's revenue. It was half of the revenue until the Credit Karma purchase, which Intuit bought. Credit Karma, right? As you can see below, this is Intuit's most promising organic growth bucket. Schulman met with nearly 24 key investors in the board of directors, including, right? And obviously he met with Elliott Management, all those, right? Interviewed several fintech and consumer bellwether CEOs, but thought his resume was the most compelling. And if you think about it, it makes sense. Why? Because Braintree has 3 margin levers to pull, and Chris is a man to pull them. Now, this is where things get pretty interesting here, okay, on these 3. First of the 3 is expansion into small and mid-sized businesses. Selling value-add software to small businesses is Chris's bread and butter. It is what he did with Intuit for products like QuickBooks and more. PayPal's marketing and loyalty programs are another key upsell channel, with Chris having experience there as well in MailChimp more later. His software-centric small and mid-sized business focus experience is ideal, to say the least. The second margin lever is international expansion. Well, Chris led a segment full of financial services products offered in 170 countries. He inherently has a deep understanding of the sensitive, fragile, and complex relationships that global financial services firms must maintain with the regulators. He has been threading the needle for years and years. The third margin lever is upselling value-add software like Hyperwallet. Again, this is exactly what Chris did with Intuit. He should have a keen sense and a strong go-to-market for a highly attractive products. Taking the PayPal job hints at him seeing these products are truly attractive, 100%, right? And with him being in Intuit, you could make an argument that, he might have been next in line to be the CEO of Intuit, to be quite frank, right? And for him to say, I'm going to bypass potentially being the next Intuit CEO because I want to be the PayPal CEO, also speaks volumes about likely where he sees the biggest opportunity ahead, right? Because you're usually not going to go, if you're an A player working for an A company, you're not going to, go somewhere that you don't think's an A company with that sort of opportunity, right? And so him seeing that definitely is very, very telling in himself, because like I said, he could probably have been the next CEO of Intuit. It's very, very important that he made this strategic decision that I want to be the next CEO of PayPal rather than the next CEO of Intuit, okay?